Hello guys, it's Nick today from LenderKit, and I'm with another Nick from P2P Securities. Today we will be talking about how blockchain transforms the investment platforms and crowdfunding platforms. And I would love to start this call with letting Nick to introduce himself and his company.
Yeah, thanks, Nick, and hello, everyone. Thanks for having me on. So Peer-to-Peer Securities is a tokenization platform we build on top of Chia, which is a public blockchain. We basically allow asset issuers, securities issuers to tokenize their securities using our technology. We also work with third parties like LenderKit to provide basically a B2B solution that can plug into existing capital raising platforms, for example. So it's an easy way for people to get started with the tokenization process.
Cool. Thanks for that. That was comprehensive. That's why we have this podcast to discuss how blockchain affects and how it can improve the investment platforms. The first question that I would love to elaborate on today would be what problems does the blockchain solve for online investment platforms? In my opinion, since I'm also a retail cryptocurrencies user, I can start with giving some thoughts about that. So for me, cryptocurrencies and the blockchain world provided a lower barrier to enter because as the retail investor, I was always struggling to find ways and options where to invest my money. So I required certain minimal threshold of money that I need to invest, or I just needed to kill a dragon, find the queen and rescue to receive what I really want to do. For me, access to cryptocurrencies and to this market was pretty straightforward because I come from digital world essentially. And if you figure out how to invest, how to transition the real world assets into digital assets and then swap them, transfer them, exchange them to other currencies, that is pretty straightforward and it's not so complicated. So, and for most of the young people that I personally know, they prefer cryptocurrencies over the traditional stocks just because it's easier, just because it's more accessible and they don't need to, it's just lower barrier to enter and they can earn more. Results of this advantage would be the better distribution and better liquidity for the assets. And I think Nick can elaborate on that since he works with that directly.
Yeah, I mean, I think what you said there in terms of distribution is a good point, right? I think with blockchains, you've got a much more direct way to get to your customers and to your investors. So it's the story that blockchain was built for disintermediation. So if you tokenize your securities on a chain, people can access it directly. There's no need to onboard with sort of a brokerage platform or some sort of exchange or trading facility. And then I think the other point you already alluded to, investors are already there, right? I think there is already a generation of Web3 native investors that spends quite a lot of time interacting with blockchains, has a Web3 wallet. So, really it's a very easy way to kind of appeal to these investors and establish a direct connection there. And I think the other thing that probably comes to mind is liquidity and secondary markets, right? Because on blockchains you have smart contracts. I think there is protocols now that allow you to do trading. And in fact, one of the things that we are doing with peer-to-peer securities and hence the name is that we tokenize things in such a way that they can be traded peer-to-peer directly on the chain. So you don't actually need any exchange or intermediary anymore. Investors can really seek out investments that they're looking for on bulletin boards and then transact, without sort of anyone in between.
Over the counter, yeah. Mm-hmm.
Correct. And these are things that just don't work in the traditional financial world, right? If the only way you can trade OTC as a sort of individual investor right now is if you have a paper certificate and you meet physically with somebody. And I think blockchains open that form of transacting to the whole world, and it can happen globally no matter where the investors are located. So I think it's sort of a huge step forward, I think, for how issuers can reach investors.
Yeah, I also think that it's one of the things that brings the better usability to the market. So it's just easier for and it's more faster for the people to interact with this and to exchange this, and they don't need to pass through all of these steps that were traditional and waste their time. They can just make it quick and earn good profits.
Yes. Yeah, and I think another big advantage, obviously, is that if you trade securities that way, where you have requirements, for example, to keep a shareholder register up to date, right? These kind of things can happen more or less automatically.
Yeah, the blockchain can be used in like various ways for tokenization or just as the data storage for the which is like public and it's transparent and it's decentralized. That's why, as far as I understand, some governments, like in the UK, they allowed the leverage public blockchains to actually list the securities and like record the transactions about the people in the public registry, because it can be accessed by anybody and everybody can check whether it's real or not. So I would say that by leveraging this public data registry and the people that are authenticated in the network already, they don't need to rely on third parties to host their data and to host their authentication data. They host it themselves, and they are the only responsible for the security of this data. This also opens the door to like single sign-on or single point of entry abilities, where with just using one wallet, you can be authenticated in various tokenization platforms or Web3 service providers. So I also think this is something that will be disrupting the industry in the next 2, 3, 4 years.
Yeah. No, I agree actually, and I think what you're alluding to there are these verifiable credentials. So basically, KYC data or accredited investor information that people can hold in their Web3 wallet, and then like you said, as some sort of single sign-on, use on multiple platforms. And again, I think it's in terms of user experience, it simply beats what we have so far, where everything is siloed into different platforms. And it's also a big advantage, I think, in the sense that it's much harder for these platforms to retain and to monetize their customers, because if you hold that data yourself and if you're no longer bound to individual platforms, you can much more freely interact. You can decide basically what you want with your data and who you want to interact with. So it kind of shifts, I think, the power balance a little bit more towards the investor, which I think is a great feature as well.
It changes like the security paradigm a bit, because like if there is no central storage of all the data about the people, like it's pretty hard to get it hacked. So everybody is responsible for their own safety and their own security. In this case, I think it's even better, because we cannot have the leak in the system, which will open up everybody, right?
Yeah, correct. Although, I mean, you do of course have to keep in mind, right? You have to keep these credentials on your laptop or computer, right? And you have to safeguard them still. So it's a bit like having password and two-factor authentication, and you need to be a bit careful about these things with Web3 wallets as well.
I would personally recommend not to host any kind of passwords or seed phrases on your digital computer, because there are softwares that can easily scrape down the data from your notes, even from the softwares that are under the password. So it's always good to have your paper or a metal card with your seed phrase that just slides with your passport and with the other information, and not somewhere digital. So just based on my experience, it's better. Okay.
Yeah.
Thanks for elaboration, Nic. It was insightful. I think we can switch to the next topic. And the next question that I wanted to ask about is which asset classes is blockchain-based investing most suited to nowadays? So as the investment platform and crowdfunding platform provider, we received quite a lot of requests from various industries. And recently, the Web3 topic, tokenization topic, decentralized autonomous organization, and other Web3 concepts, they became really popular. And I see that like not significantly more, but let's say gradually more and more companies, they are trying to leverage Web3 technology in their traditional Web2 applications or even traditional Web3 model, Web2 business models. So in my personal experience, the most spread case of tokenization and applying these Web3 principles is real estate. I see a lot of companies from US and from Europe starting to applying this tokenization principle for real estate, because first of all, it breaks the barrier of the entry point, it democratizes the investment into real estate overall, and it gives great liquidity. So you're not stuck with your real estate, you can send it somewhere, you can divide it into parts. I hope that in countries like Saudi Arabia and United Arab Emirates and the countries that are still gaining the traction of blockchain and Web3, this will also start to appear pretty soon. But I also wanted to explore your experience with like blockchain-based investing and this type of assets. What type of like industries and what type of use cases have you met the most?
Well, look, I think for us, a big focus has been the investment funds industry. So I think there's been some real interest there from both smaller and larger investment managers. And I think the sort of demand that we're seeing is there, not equally spread across the entire investment management industry. But I think what we're seeing is that there is definitely interest from sort of closed-ended funds. And I think the big overarching topic here or benefit is simply this liquidity and easy availability of a secondary market that otherwise investors don't have. So I think it's a huge benefit if there's a way that you can trade out of your investments relatively easy versus being stuck in a private equity fund for 10 years. Amongst VC funds, unsurprisingly, I think crypto venture capital funds are actually the ones that are sort of spearheading this movement. I think they understand tokenization the best, and they're the most willing, I guess, to take the plunge here and try things out. So I think that's where we see a lot of activity. And the other sort of big narrative that sort of emerged over the last few months, I think partly driven by the banking failures in the US, is actually money market instruments. So interest rates have come up obviously over the last 2 years quite significantly. And in the crypto space itself, interest rates have actually come down. So there's been a bit of an inversion over the last 2 years where, things have sort of flipped around from, the traditional world giving you 0 interest and crypto paying you 5 or even 10% interest on stable coins. That's sort of now the other way around, where there's very little interest to be earned in DeFi or crypto protocols, but you can earn an easy 4.5% on treasuries. And so investment managers are looking, I think they've identified this demand. I think just yesterday, for example, there was a money market fund that was tokenized by Aberdeen, has been launched on a blockchain. And I think over the last few months as well, I think Hamilton Lane and Franklin Templeton have also launched tokenized money market funds in recent months. So I think there's real activity, and not just from small sort of niche players, but I think all the big fund managers are looking at this. So I expect to actually hear a lot more news about this, and I'm pretty sure we're going to see different types of funds as well, besides the two I just mentioned. So I think there is a real sort of movement underway.
Yeah, I agree with it as well. I think it's the case of normal evolution, because the investors that are like receiving big wealth and big profits now, they are younger investors, and they are like used to invest into the new way, and for them it's easier, and for them it's more understandable to invest into the like tokenized funds, for example, where they believe in smart contracts and believe like that the technology won't screw them up, right? Rather than compared to traditional investment model, which they may not be so familiar with.
So we've been running a survey for this purpose to find out what investors are currently interested in investing when it comes to on-chain tokenized securities. The survey is available on our website. You'll find the link there. And to give you a bit of an idea of the responses we've received so far, we asked 8 questions. The answers are as follows. So the first question was, what type of investor are you? Are you an individual or an entity? 95% of respondents are individuals. So very clearly, the demand here comes from the retail or accredited investor side. It's not institutions. 70% of respondents are from the US. So again, I think it just reflects what you generally see in capital markets. I think US capital markets are much deeper. There's more capital and more capital that's willing to take risks. In terms of accreditation status, we had 25% accredited investors, and the rest was actually just retail. Yeah, and then we asked about which assets do people want to invest in, which tokenized securities are they interested in. And the winner here was individual stocks, actually. So 77% said they would invest in single stock tokens. Yeah, and then we asked about how people would like to buy into these security tokens. I think on-ramping is still a bit difficult. It's still an issue in crypto. and we actually 90% of respondents wanted to use existing cryptos, like in our case, a native Chia token or wrapped Bitcoin or wrapped Ethereum, and purchase with that.
It's really curious to see that the people are preferring individual stocks of the companies more compared to real estate and other asset classes. So it's kind of like new thing for me. I was also the thing that also amazed me that the people are also willing to invest more with their cryptocurrency compared to traditional money. So that means that there is a big portion of people that already accumulated a certain Web3 wealth and Web3 digital wealth, and they now find ways to try to like implement it and actually like make it work.
If I can just add one point, right? There is also sort of I think going from payments to investments and back is just much easier in Web3, right? You've got stable coins. And you can almost use your funds as anything which is tokenized, you can use it as a payment as well if you wanted to. So I think it's I think user experience is much better than in the legacy world, where things take forever to settle, and you got to transfer things from one platform to the next, then go onto your banking rails and back. So it's painful, and so I think once people discover that at scale, I think there's going to be a huge movement going to be underway.
Yeah, it's all about the educational curve. So now there are more and more young people that are just in this already, and for them not knowing that this exists is kind of strange. Like for me, I've been using blockchain and these technologies for over that 5 years, and for me now meeting some people my age or like even the younger age that don't even know what it is and don't even know how to use it, it's kind of strange. I mean, I'm not judging, but it's like we are from the same industry. We are from the same IT technology, and some people there, they are not so like they're afraid of it for some reason. And I think if people are afraid of something, this is where the innovation hides, and this is where you need to really look into this and await something big.
Yeah, I mean, I think definitely last year hasn't done the industry a lot of favors, with the exchanges blowing up, and I think
it was the cleaning.
Right, and regulatory uncertainty is still there. And I think, especially in the US, I think Europe has actually done a very good job at this, and both the EU and the UK. I think Switzerland has been actively legislating as well. But yeah, it's not the case everywhere yet, and it's probably going to take a few more years for things to get sorted out.
For me, it's like a certain, not war, but I would say fight between the old world and the new world. And eventually the progress will just win. And because it always happens. The next question that I have for you, Nic, would be we talked about the benefits and the good points of using and leveraging blockchain. Now let's talk about the risks that are associated with blockchains and what is the backside? What is the backside of the medal?
Well, look, I think fundamentally you have the same risks with tokenized securities that you have with cryptocurrencies, right? So I think custody is obviously a big topic. I think the good thing about tokenized securities is that if you don't self-custody, custodying securities is a very, very much a regulated activity. So if there's custodians in this market, generally you can assume or work on the assumption that these guys know what they're doing, and I think that was one of the big problems in all these crypto exchange failures, that cryptocurrencies are not securities, and people were able to get away with things that simply you can't get away with when you're handling securities. So I think that's a big plus. But people might still want to self custody, and bringing in a custodian, it's again an intermediary, an extra layer of fees. So if you self-custody, you want to make sure you're set up properly, and you have some sort of multi sign-off process in place, that there's not sort of a single point of failure, right? The equivalent of multi-factor authentication in other places in Web 2. Yeah, and then other than that, I mean, you have to be aware that transaction irreversibility is obviously still there. So be careful that when you transact, you don't make fat finger mistakes. But again, I think, because you have these KYC requirements with securities, typically, you usually know where your assets are going, or you would be able to find out from the verifiable credential issuer if there's a legitimate sort of reason for it. So I think even there, risks are a little bit lower than sending your Bitcoin to the wrong address, which is a guaranteed loss, I guess.
I agree with it. It's just the self-responsibility point. It's not the point that you're not dependent on someone. It's just you need to be aware that if you make a mistake, that's your responsibility. That's if you make a mistake in the bank, that yes, it can be reversed, but there are also some downturns which the bank gives. They can make a mistake and leave you without the money. Blockchain cannot make such. I could say, like in my experience from the clients that we were talking to and like the platform that they're trying to launch, the regulations and the early adoption of the laws around cryptocurrencies and tokenization is also a big, like not a problem, but I would say a roadblock at this stage. So I see that US is the most advanced country in terms of tokenization because they're already adopting these principles and they already have live platforms that are doing this type of the businesses. In other countries, it's still work in progress. I hope that at least by 2030, the global adoption and the global regulations will be there, but I'm not sure if I still believe in it, but I really hope that it will be there.
Again, right, I think it really depends on it's a jurisdiction by jurisdiction sort of case, right? And yeah, I think the UK is actually quite progressive. So for any issuer in the UK, I think you can pretty much do what you would like to do now. So yeah, and I mean another interesting point maybe to if for certain types of securities, you're bound to your home jurisdiction. So if you're a company, you're usually your equity has to be issued under the laws of the country where you're incorporated. But for debt, for example, or if you're tokenizing real world assets, you can in many cases just opt into another jurisdiction. So an issuer in the Middle East could opt into English law and issue their securities under English law, and then it really doesn't matter what how advanced your home jurisdiction is. I think there's a lot of ways now that for issuers that want to do this, go down this path, it can be done.
You have to fight some obstacles, of course, but yeah, I understand that it's doable. Of course, do your own research with any kind of project in nowadays world, especially after big failures that happened over the last year, even with the banks and other projects that we believed in. You have to be really careful and analyze the projects that you are investing to, because it's an industry that is called blue ocean. So blue ocean in terms of like from the Investopedia, it's an industry which is in infancy levels. So there is a lot of innovation, a lot of new things are appearing, but where there is a lot of innovation and a lot of cool things are happening, there is also a lot of scams and a lot of like bad people that are trying to leverage this. The time and the regulations and the adoption of the laws will show where the industry will be heading.
Look, I think I think crypto, of course, is full of scams, and you just got to be a bit careful about what you buy. But again, with securities, right, nothing really changes here in my mind compared to the marketing rules and regulations and requirements to have a prospectus and these kind of things exist just the same way for tokenized securities. So make sure you read these documents, and again, you should not even be able to invest in things that you're not accredited for. So I think the risk should be manageable in my mind.
Then, like the last topic that I wanted to cover, and I think that you will be like you can greatly elaborate on that, is that the Chia, the blockchain that P2P Securities is using, is the public blockchain. And in our case, in our experience in LenderKit, we had also experience with private blockchains that work a bit differently. So can you please explain the main differences between using private blockchains and public blockchains, and like what perhaps are the disadvantages and advantages of these two? I'm not trying to compare, but maybe like some points that allows the users to consider what's best to use.
Yeah, look, I think fundamentally, right, if you're a securities issuer, you're looking for capital, you're looking for investors, right? So I think your first thought is you want to be on those blockchains where you have the most users, where there's the most capital, right? And that typically happens to be public blockchains, right? the biggest blockchains by market cap are still Bitcoin, Ethereum, so things that are decentralized. And users value that because that's where the native tokens are proper store of values. That's where you would expect NFTs to be, around forever. If you invest in NFTs, you don't want your blockchain, 10 years down the line to shut down because the entity that's been running the network goes out of business. So I think that's why users always prefer public blockchains, even though maybe you have higher transaction costs and that security and decentralization you get means it comes. There's a cost associated with that, right? Transaction cost a bit more. They don't settle quite as fast. So there is trade-offs, but I think ultimately, I at least personally, I believe quite firmly that in the long run, public blockchains are going to win out, also in the security token space. I just think the greater availability of users and better infrastructure that will be built will simply lead asset managers to prefer those. So on the other hand, look, I think there's nothing wrong with I think investment banks and I think some of the asset managers right now feel a bit more comfortable getting started on private chains. It's a bit more, for an institutional mindset that's used to working in this fully regulated environment, it's maybe just a bit more digestible to get started that way. But in the long run, I firmly believe that we're going to see investment products predominantly on public chains, and that's where the users are going to be.
Just because of the usability and the access to it, right?
Yeah, absolutely. And then I think there's maybe one other consideration, which is a bit of a technical point, but I think there is actually a risk that regulators will come round to the conclusion that if you have something which is permissioned, right, where the nodes are run by or coordinated in some form by some central organization, then ultimately what's happening is that these guys are processing and ordering transactions, right? And there is a risk, sort of, I think, for market abuse potentially. I can see a world where regulators will say at some point that these private permissioned blockchains actually have to register as exchanges potentially to process securities transactions. And then of course the whole thing doesn't make any sense anymore. Then you're back into the old legacy model. So yeah, yet another reason I think why in the long run, as a business model, you bulletproof yourself if you're building on top of public decentralized chains.
Pretty comprehensive. I also wanted to add about the regulations, but you finalized this topic yourself. So yeah, it's pretty comprehensive. Thank you. I don't think that we have more topics for today. We really appreciate the insights that you've shared, and I hope you guys found this podcast useful. Stay tuned for more topics with Nic, and the rest of our team.
Thanks for having me on.
Cheers, guys.